Hello everybody, this is Books of the Stock Market. How's everyone doing? As for me, I'm doing pretty well. Recently it got a bit hot, so running in the afternoon is almost impossible. Anyways, in today's video, we'll be talking about Biden's plans surrounding capital tax gains. When news broke out about Biden's tax hike last week, we saw the S&P 500 make a small dip. Fortunately, now it looks like we have recovered, so it is clear that the capital tax gain at around 40% is not going to derail the stock market. But before we do that, let's do a portfolio update. We saw Ethereum trading at the $2,700 and $2,800 range. Other than that, I'm up 354% in unrealized gains, which seems to just increase every week. So far, we see Ethereum outperforming Bitcoin pretty heavily, as it looks like it dips less than Bitcoin as shown in the previous correction, but it also rises faster than Bitcoin. This outperformance was expected to happen, as in 2017 the altcoins did just that. However, for this bull cycle run, we have been hearing news about Ethereum 3.0. Ethereum 3.0 is expected to release on May 5th, and in the most basics of terms, this update is supposed to make Ethereum way more efficient in terms of price and speed. I'll probably make a separate video about this, but yeah, it should be interesting what happens to Ethereum around May. Let's now move on to Litecoin. Here we have Litecoin still at the $265 range, which means it still hasn't broken out of its 2017 high. All I can say is that I've probably too many Litecoins, as this is one of the few altcoins that is not outperforming Bitcoin. I always think to myself what it would be if I just dollar cost averaged into Ethereum instead of diversifying into Litecoin. The only good thing about Litecoin is that it mirrors Bitcoin almost perfectly, and since Bitcoin hasn't gone up in the recent days, I guess we could explain Litecoin's movement. Personally, I think Litecoin does this mimicking because when Litecoin first came out, it was dubbed as silver when compared to Bitcoin being gold. As for my Bitcoin position, well, it hasn't been going so well. I think at the peak I was up $500, but after the 20% drop that happened a few weeks ago, we are still at a loss. However, we did have a good day, so just one more day like today, we'll be back at $6,000. Also, I would like to note once again about Ethereum's strength this cycle. So as you can see, I'm up 24.37% when I think I only bought this a week ago. However, it's only for one share, so oh well. With the portfolio update out of the way, let's dive into Biden's tax plan. But before that, remember to like, subscribe, and press the notification bell for me, as it really helps the channel. Let's first look at Biden's tax hikes. On April 22nd, it was reported that Biden will be proposing doubling the capital gains tax for wealthy individuals to 39.6%. The main reason behind this move is to help with the increasing inequality that has developed in the United States. This is pretty bad for the rich, as people who are earning more than $1 million may need to pay taxes as high as 43.4%. Also, if the person is living in New York or California, we could see that individual paying above 50% in taxes. Although it's all doom and gloom for the rich, it looks like raising taxes in this way will be more effective in bridging the gap between the rich and the poor. Biden wants higher taxes on investments rather than on income, as many individuals tend to have most of their wealth tied to investments. Biden is also expected to use these funds for the American Families Plan that is expected to be released shortly. Other than that, it is expected that the rise in capital gains tax would raise around $370 billion over a decade. Off this news, we saw the S&P 500 only fall 0.67%. It looks like the stock market has shook off this news, but it still lingers, and the stock market is mainly held by the rich. For instance, let's look at this diagram by the New York Times. We see that the top 1% own over 51% of the stock market. If we extend this to include the top 5%, then they basically own the entire market, as the number increases from 51% to 92%. Therefore, if you see people who make over $1 million a year start to sell before the law is enacted, we can see a drastic drop in the stock market. But this probably won't happen, as there are many reasons to not pull out from the stock market. Here are the two biggest reasons why I think the stock market won't crash due to these capital gains tax hikes. The first reason is the simplest reason. Biden's tax reform plans most likely won't be put into effect until after this year. In this article, Yellen has confirmed that taxes will be implemented gradually over years, as suddenly rising taxes now may hinder the recovery of the coronavirus. I believe Biden said something similar, where he wasn't interested in fully enacting all of his tax hikes but gradually implementing them. This means that most of his hikes would probably not be enforced until next year, which means that 2 years have already passed in Biden's presidency. This means that the rich will just need to stay in the markets for another 2 years in the hopes of a different president taking over and reducing these taxes or even completely eliminating them. The second reason is due to rampant inflation that's going on. We know the $1.9 trillion stimulus plan that was passed a few months ago. This plan also came as Trump just released the $900 billion stimulus plan. The usefulness of all stimulus plans from both presidents can be argued, but what can't be argued is the amount of money that has flooded into the markets. Let's look at the M1 money supply to see what exactly is happening to the markets. We see this graph and we see a monstrous move upwards in the recent months, but to know exactly what this move upwards means, let's define what money supply is. Money supply is defined as all the currency and other liquid instruments in a country's economy. Basically, it is a term to measure how much money is in the market. Money supply can also be divided into different categories such as M0, M1, M2, and M3. As we move from 0 to 3, we get more broad in our definition. So M2 would include M0 and M1. M1 includes coins and notes that are in circulation and other cash equivalents that can be converted into cash quickly. In this case, we're looking at the M1 money supply because it includes M0, which represents physical cash, and also goes a step further to include deposits and checks. Anyways, let's look into a more zoomed in version of this graph. When the coronavirus hit around March, we saw governments around the world scrambling to keep the economy afloat as the global economy has come to the halt. To keep the economy afloat, governments around the world decided it would be best to inject money into the economy so people would start spending and banks would start lending. The first wave of quantitative easing happened in April and we saw M1 money supply shoot through the roof. And like I said before, we have seen stimulus plan pass after stimulus plan. This means that the dollar you're holding in your pocket loses value constantly as there's just more money in the system. Well, if the rich start to pull out of the stock market, then the cash will start to lose value. We know the Biden administration is more progressive in terms of spending, meaning that liquidating your investments into cash is just a bad move as your cash will lose value. Therefore, I firmly believe that the rich will keep their money in the stock market and try to wait for Biden's presidency to end. However, it is important to note that the two reasons I listed are based on what I think could happen. I'll try and look for some historical data that will at least hint at what happens after, but we have never been in this situation where taxes are rising in conjunction with never seen before money printing. However, whatever the case may be, hopefully I was able to explain my position about the new tax hikes pretty carefully. Maybe we'll see a small dip, but I'm sure at the rate we are printing money, the safest place to put your money is in the stock market. If you like this video, press the like button. If you have any questions, leave a comment below as it really helps the channel. If you want to watch more videos like this, press the subscribe button. This is Books of the Stock Markets, and I'll see everyone next week. Thanks.